Hey guys, today I want to talk about picking the best index fund or mutual fund and whether or not the expense ratio that comes with a mutual fund is actually worth it. Let's get started. So I'm currently shopping for index fund or mutual fund myself, and I wanted to share with you guys my process. Previously, when I started to invest in index funds in 2020, one of my funds that I invested the most in saw a 70% return, and I was really happy with that. So I want to quickly share the strategy with you. If you don't want to invest in individual stocks and you want to keep your investing super simple, I highly recommend investing in index fund. And I want to show you quickly how to pick the best index fund or the best mutual fund and kind of compare them to, because mutual funds do come with an expense ratio and there is some downside to that, but you do get some active management, and we'll quickly talk about whether or not active management is actually worth your money. And for those of you that don't know, an index fund is basically a fruit basket or a dozen donuts that you get at a donut shop that has been randomly selected for you, and you just buy the entire variety pack rather than getting a dozen donuts that are exactly the same. And the only way that a mutual fund is different from this is somebody actually goes ahead and selectively picks each one of those donuts that they think is gonna be absolutely the best tasting for you, except mutual funds have nothing to do with donuts and it's actually to do with money and a lot more complicated than that. But all you need to understand is that there's a board of experts that basically would bet on which stock will be performing the best, and they're basically trying to outperform the market. And today we'll be looking at Fidelity's fund research to gather all of our information that we require to do our research. And the reason why I want to use Fidelity is because they show other mutual funds in there, they show other index funds that are not their own, so that you can quickly compare and understand which one you should be going after. And the reason why I use Fidelity and not Vanguard, even though Vanguard is an absolute aristocrat when it comes to index funds, is because Fidelity has much lower fees for their index funds, and oftentimes they also have much lower fees for mutual funds and such. And I also prefer Fidelity's tool for doing this research rather than Vanguard's tool. And I quickly want to explain how to look at expense ratios. Basically, if you see an expense ratio of 1%, that means for $10,000 invested, you're going to be paying $100 in fees annually to the fund. And this is for mutual funds typically. And some index funds also have expense ratios, but they'll be lower. Now, this money does add up. But if you are getting significant growth for paying a little bit more of an expense fee, in my opinion, that is totally justified. So when I get here, what I like to do is I like to sort by the expense ratio, and I like to sort by the highest return possible. First, to get started, we're gonna sort by the highest return possible and look at the mutual funds. Here we click highest return, and then the expenses we're gonna leave blank for now, and then we're gonna click view results. So in here you get a nice table of how all of these funds have been performing. So for a 1-year return, you can click here and you'll see that in 1 year, these mutual funds have returned 150%, 148, and so on and so on. And that's what I mean. If you are getting really high returns for your investment, the expense ratio might be worth it. Although the important thing to note here is that these numbers are slightly inflated because it was 2020 and anyone that was holding tech stocks such as Zoom, Tesla, and so on have seen really massive gains this year because the pandemic has definitely accelerated the digitalization, and those companies are doing significantly better now, and that's why we see the gains. So for our purposes, we want to look 3 years back, 5 years back, and 10 years back, just to make sure that the mutual fund has been tested through the test of time and has held up over the years. We click here, 5 years. So we can see that Baron Partner Fund retail shares have been going strong throughout most of the years and returning 19.3% throughout its entire life, which is much better than the market average. It does come at an expense of 2.2%. So for every $10,000 invested, you will be paying $220. Now, if we go back to the fund that has been often showing up right here, Baron Partners Fund retail shares, you can always do further research on what's going on with the fund. So what are their holdings to understand what they're invested in, or if they're heavily invested in one particular company that is currently inflating their gains. So if we scroll down here, we see that their Tesla part of the portfolio is sitting at 46.95%. I think at 46%, that's not really enough diversification for me. Here, you gotta invest a minimum of $2,500. So this isn't for everyone if you are looking to invest as little as possible. Let's say you wanna invest $100 or $1,000, not quite 2,500, this wouldn't be for you. If we look at the life ratings and the expense ratio of these companies, BPTRX has an expense ratio of 2.2%, with a growth of its lifetime of 19.29. So I do think that's really impressive to average out to 19.25%. That's awesome to see. And then as we get to the bottom here, BG Sachs 1.18% expense ratio and 9.96% return. That's not necessarily a really good return. There are index funds that are able to beat that. So I wouldn't say that this actively managed fund is worth the expense ratio, in my opinion. So now on that note, let's look at some index funds. So to look at index funds, we're gonna back out of this and we're gonna sort by the expense ratio as well. So we're gonna add that to our search criteria and dive back in. So returns, we still wanna keep on high, and then the expense ratio we wanna put on low. And as you can see, previously there was over 300 matches, but now we're only down to 19. So it's definitely a smaller basket to pick from, but you can definitely get some amazing index funds from here. And you can do further research on other index funds that maybe Vanguard offers that are different from the ones that you can see here. This one doesn't show absolutely all of them, but through my research, I haven't found any of the Vanguard's ones that have been performing as good and also have an expense ratio as low as Fidelity's. So here we can do the exact same thing. We can sort 1 year return. And one of the best index funds here is FS Max, returning 32.16%. And that is actually my best index fund that I currently hold and held through 2020. And the reason why I saw a 70% return on this index fund rather than 32 that they're reporting here is I actually picked up the index fund at April lows, I think. I didn't get it at absolute March lows. That was my mistake. I definitely thought the market would keep going down farther and farther, and I was waiting for that perfect moment. Definitely never do that. But I picked it up in April and I did see 70% return on this index fund. So that is really nice, and it's by far my favorite index fund of all the ones that I have researched. So looking here, the fund has an expense ratio of 0.036%. And that is really, really good. That means that for $10,000 invested, you'll be paying $3.60. And you can also look over here. The overall rating of the fund is also really good. It definitely has all the stars that it needs to have, 5 stars here. Really nice to see. And if you look at the 3-year return, 5-year return, 10-year return, and life, it's doing exceptionally well as an index fund. And if you go ahead and do further research on the fund, you'll see why it's been doing really well over the last 10 years. If you scroll down here, you see that the company is holding Square, Uber, Zoom, Twilio, Snap, and so on. All of these are amazing companies to hold. And because they're in this fund is performing really well. So the question you might have is, why not just pick these best companies and invest in them? And that's definitely something that you can do. But then not being in an index fund, you're not getting that basket. So you're gonna have to buy an entire box of that one same donut instead of getting a variety pack, which does have some downsides. Unless you're willing to spend $100,000 on stocks right now, the best way to do that is through an index fund where you get a tiny little piece, a crumb you could say, of every single one of these companies. And that's definitely gonna be better for you because it's very well diversified. So in order for you to actually lose money, the entire market has to come crashing down. And although that does happen, if you look over a 10-year period, 20-year period, and so on, the market has always gone up. And that's because you want to keep your money in assets of some sort. Because if you hold your money in a bank account, you'll consistently be losing that money year over year over year, especially with the current savings rates in place. And the way that basically works is there's a consistent inflation that the government tries to implement. Because inflation exists, your money will always lose value year over year unless you put them in assets. So you definitely want to move your money into assets, and the best way of doing that is through index funds or mutual funds. And as you can see here, there's absolutely no minimum to invest. So you can invest $1 into this entire index fund, and that dollar will get distributed over all of those companies. And that's an awesome advantage of this index fund. And that's definitely the best place to start. I will definitely be adding more money to this index fund. And I'll also probably be picking up one of those top 3 mutual funds that I've been talking about. And on top of that, I also hold individual stocks. I love doing stock research. I love determining the value of the stock and trying to beat all of these index funds and mutual funds. It's a lot of fun to me. And if that's you, then definitely check out my video on how to value any type of stock. When I was doing research on how to value stocks on YouTube, I had to go to 100 videos just to figure out how to value every single different type of stock out there. So I ended up creating a video that helps you value any stock that you might come across, whether that be a value stock, whether that be a dividend stock, high growth stock, or a tech company, and so on. Definitely check that out if investing in individual stocks is something that you enjoy doing and you would like to pursue. If you're not interested in investing, but you do want to save money or preserve your money and grow your money over the years, grow your wealth over the years, and one day reach financial independence, I definitely encourage you to pick up one of these index funds or mutual funds, and also do further research, because I'm not a financial advisor by any means. These are just the tips and tricks that I use for myself and have seen really good returns from doing so. So I wanted to share them with you guys, but I always encourage you to do further research and never rush into anything that somebody's telling you to buy before you understand why. At the end of the day, what matters more than which one of these funds you choose is that you actually go and pick one and start investing into one, because then you'll actually see year over year returns rather than your money disappearing into nothing. That's the main point that I want to get across, is get invested into something. So right now, if you don't invest at all, you don't invest into anything, start with index funds. Either go with FS Max, go with a mutual fund of your liking, pick one of the ones that Investopedia recommends for you, just get invested. And if you are looking for more information, definitely leave me a comment below and I will respond to all of your questions. And if you think that I missed a piece of information, or I'm missing an index fund that is absolutely awesome, or a mutual fund that is absolutely awesome, definitely comment down below and let's talk about it. Now, if this was helpful at all, definitely subscribe for more material. Thank you so much for watching, leaving a like, commenting down below, and I'll see you next time.